Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been patient.
Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your weekdaily morning show where we bring you the latest in Bitcoin and cryptocurrency technical, on-chain, and fundamental analysis. And in today's episode, we're going to also sprinkle in a little bit of macroeconomics in there from the side of the Fed. We're going to talk a little bit about the Federal Reserve's balance sheet tightening that's going on right now, but we're also going to mainly speak today on the failed breakout attempt to the upside that we saw yesterday on Bitcoin. It looked like Bitcoin had a slightly better than not chance of breaking $25,000 just with how many times we had tested that level of resistance. But now Bitcoin has failed to break above that level and has actually gone through a small correction. Is this the beginning of a much larger correction that could see Bitcoin drop another couple $1,000s? Or is this just simply the beginning of a small correction from which Bitcoin will bounce and we'll end up having another rally move from over the next couple of weeks, breaking 25K and moving back on up to 28,545, which is that big level of resistance that we are paying very close attention to. We've got quite a lot of technical analysis to jump into today, and also we've got a lot of chat to read because there's a lot of you guys here today. Looks like we've already got over 100 people watching live right now, 18 likes. Thank you guys so much for all of the support. Jake Thetty was the first one in chat. Said, good morning, Jebb. Good morning to you, Jake. Grand Roofing Incorporated commented so fast that I think that he may very well have had that copy pasted. Good morning, Jebb. Good morning, everybody, on this beautiful rainy day here in Kokomo, Indiana. Sounds depressing, but it's not. I get to watch the show today. Hashtag FinSov. Boom, there you go. Yeah, I suppose you can't go out there and do some roofing while it's raining. That sounds pretty dangerous. I put a roof on the addition that we were building on our house after I did not sleep that night. I literally stayed up the entire night because at that time, it was like 6 years ago when I was in high school, it was the summer, I would stay up literally all night and I'd go to sleep around 6 a.m. because I was just a complete degenerate. But now I don't do that. Now I go to bed on time. But back then I would stay up all night, and then I stayed up all night and put a roof on there. Grand Roofing can probably tell you that is probably not the best idea, but oh well, I suppose I've grown in my wisdom. Oh my is in chat, said, good morning. Hope everyone has a good day. Hashtag FinSov. African Rat 007 said, hey Jebb, what's up, African Rat? Shout out to you. Hope you're doing well over there. Fox P2 said, it's what? It's the sky and the ceiling. Okay, hi, Fox P2. Mike Lowry in chat said, hello, good morning, everyone. Damon, let me just try and read some new names here that I haven't seen in a little while. Damon Bosalil said, Aruba, Jamaica. Oh, I want to take you. I don't know what that's from. That sounds like a song lyric. Grand Roofing Incorporated said, oh, give the show that thumbs up, guys and gals. Yes, thank you so much. We've got Sean Frost in chat. What's up, Sean Frost? Good to see you. It's been a little while. We got Ricky Rivera. Said, this song gets me pumped. Good morning, Jebb. Yep, do love that. And Grand Roofing said that there's hail also. JoJo's in chat. Said, good morning. Silas E. Borg in chat. DJ R78 and Queen in chat. You gave my pre-planned copy-paste secret away. I just saw, like, I hit go live, and then you, like, sent this long message just instantly. I was like, it must have been copy and pasted. It just had to be. When People's in chat said, good morning and God bless all. Jared McBee said, sup, what's up, man? Biodiversity in chat. A lot of new names here. Said, morning, Jebb. Beach Boys way down in Kokomo, Indiana. Yeah, there you go. We drove through Indiana about 8 months ago when we were driving up to Michigan. Billy Williams just donated $10. Said, good morning, Jebb. Thank you so very much for that donation. Kicking us off on the right foot. Crypto JMP in chat as well said, I'm here. Hello, guys. Thank you for saying hello to us and the team. Let's go ahead and jump straight on into it. We're going to start over here on none other than CoinMarketCap. Apparently, it's Margarita Day. CoinMarketCap says, enjoy your margarita today. I'm not sure. What is that from? I don't know what February 22nd is having to do with margaritas. But nevertheless, I mean, if you're having margaritas, then good for you. Not Binance. Bitcoin currently trading just shy of $24,000. Down 3% over the last 24 hours. We believe strongly in Bitcoin and its fundamentals, but one thing that we are not always the most excited about is the fact that Bitcoin goes through a correction. But of course, Bitcoin going through a correction is not always a bad thing. We've had such massive rallies over the last 45 days that it actually makes a lot of sense that we would have some sort of a correction, even if it's not exactly when we wanted. And that's one of the things that we talked about over the last couple of streams is that, yeah, it looks like Bitcoin's really pushing and trying to break through 25,000. But if it goes through that correction, that's not exactly the end of the world either, because Bitcoin does need to consolidate and lock in some of these gains, which I can show you right here. Just taking a look at Bitcoin, you can see this broken bearish below that uptrending level of support, which we were looking at yesterday. In doing so, though, it actually has not set a new lower low for itself. It's actually come right back down and tested this same level of support that it set on the 19th of February, 2023. It's actually tested that level 3 times. Now, we may end up going through and breaking it relatively soon, but for right now, 23,800 and let's call it about $23,840 is the level to hold, and it looks like Bitcoin is very much trying to hold that level. That is exciting. We'll go ahead and set that as a blue for support, and we'll reset this as red for resistance. There we go. And also, unfortunately, we have to set this uptrend as red for resistance as well, or a kind of blood red, maroon, whatever kind of color that is. So Bitcoin falling down to the downside here seems to be a bad thing on first glance, because it does technically mean that we've broken bearish out of our ascending triangle pattern, which, as I told you yesterday, have 70% chances of breaking to the upside, and it also being a continuation pattern from market movement that was bullish indicates that it would likely move to the upside once again as well. But that's not exactly what's taking place right now. What's taking place right now is that Bitcoin is falling to the downside out of that uptrending level of support and out of that ascending triangle pattern. On first glance, that seems like a bad thing. I'm not going to tell you that it is, because I actually think this might be a great opportunity for Bitcoin and crypto. But let's go back to CoinMarketCap, finish our market recap. Ethereum is down by 3% right now over the last 24 hours, but just remember, it is still up 37% over the last 90 days and 36% year to date. Binance is down as well, sitting down 2.1%. XRP down 1/3%, sitting at 39 cents. Cardano sitting right around 39 cents as well, sitting at 38 cents, 0.37. It's down 2.66% in the last 24 hours, but still up 54% year to date. And that's really something I want to hammer home, is that even though we're in a bear market, and by the way, I say that we're in a bear market only because there's a lot of people that still consider us to be in a bear market. I think there's a very strong argument to be made that we're no longer in a bear market, but instead we've actually gone into an accumulation phase, if not the very beginning stages of a bull market. But whatever you want to say about that, the fact is attention in crypto is still much lower than it was, and yet a couple of things are true. Most of the top 10 are up at least 30% year to date, except for Binance and the stable coins and XRP. All of those are not up as much as they could be for a variety of reasons. For example, Binance has been struggling because there's been so much skepticism around exchanges and exchange tokens following the fateful collapse of FTX. The stablecoins obviously typically don't move. Now in market capitalization, BUSD is down significantly, but then XRP also has that dreaded case surrounding it. But everything else is up over 30%, except for actually Dogecoin as well. But you're looking at Polygon, Cardano, Bitcoin and Ethereum, those being the really big, strong power players in the top 10, they're all up over 30 or 40%. Now, Dogecoin's only up 21%, but of course, Dogecoin's a meme. But if you look at the top 10, something interesting should strike you, and that is that the entirety of the top 10, no matter how well or poorly they've performed, are all still worth individually, over $10 billion. Wow. That's really impressive to see that many cryptocurrencies worth over $10 billion. And in fact, to get down to a cryptocurrency that is not worth over $1 billion, you have to go down to Stacks, which is the lowest valued above $1 billion market capitalization cryptocurrency. And it's currently sitting at rank number 52 after going through a massive rally in just the last 24 hours. That's pretty remarkable, and it does show you that there's a lot of attention still in this space, and that it still is a very lively and active space, even though we saw so much attention leave the space after Bitcoin went through its correction last year. So let's go ahead and jump on over to the Bitcoin charts and take a look at this market correction. But this time with context, because one of the things that people like to talk about is what's going on the 1 minute chart, or the 37-second chart, or the 1 minute and 32-second chart, or the 2 minute and 47-second chart, and then they don't want to look out at the daily chart, the weekly chart, or the monthly chart. Let's look at the context here. The long-term context is very complicated, but also what I'm going to show you is quite simple. And that is, quite simply, we've been in this bear market trend for over a year, at least a year and a half. From that point, we rallied all the way to $69,000, corrected all the way to $15,500. That was a major correction. Many people thought, oh no, this is the end of Bitcoin, but they don't know their history, because the exact same thing happened back here in 2017, and 2018, where we saw Bitcoin correct 84% to 85%, and then it rallied 2,000% in the next 2.5 to 3 years, largely as a result of people realizing just how unstable their finances are in an inflationary currency like the US dollar, or literally any other national sovereign currency, even gold and silver being inflationary. The other thing to keep in mind is not just that we've set a lot of lower highs and that we're in theoretically a bear market, and we actually haven't technically broken out of that bear market yet. The other thing to keep in mind is that we have a level of resistance right here at 25K. That's a pretty huge resistance level, because our bear market here has 3 major highs. 1, 2, 3. This level that we were trying to break through was the local high that we had set. Sorry, I was on the wrong screen there. That we had set there back in August, around August 13th. Breaking through that would have been a huge change of character for the cryptocurrency market. In fact, even over on Lux Algo price action concepts, if you were to bring that up, what you would see happen here is that whenever Lux Algo price action concepts would come up, that would basically be a change of character. That would be Bitcoin breaking a critical and major substantial level of resistance, and then managing to go through a huge rally. If we were to see that take place, that would be extremely powerful of a movement. So it makes sense that that was a pretty difficult movement for Bitcoin to break through. I'm not the most concerned about that, especially if you look out here on the Lux Algo price action concepts. You can see there's actually a pretty huge order block right here that Bitcoin was trying to break through, and so it makes sense that Bitcoin didn't manage to totally get through that as much as we would have liked. That doesn't mean that we won't get through it in time, though. Let's just turn off Lux Algo there for a second and take a look down on the daily. On the daily chart, Bitcoin has undergone some major rallies over the last 45 days, the first of which rallying Bitcoin $8,000. We're talking nearly 50% in just a little over 30 days. We rallied a total of 55%. After that first rally, we had a pretty large correction. That correction definitely helped the bulls to lock in some of their gains, and also gave the bears a little bit of a run so that they could get a little bit tired again. And we saw that correction be 12% in size. From there, in the span of just 7 to 8 days, Bitcoin ran 18%. So, as I told you yesterday, it is theoretically possible, and I thought, and I still think was pretty likely, that Bitcoin could have broken bullish here and gone through a major rally such as this, basically a rally that would look pretty similar to the rally that we did before. However, that would require a lot of strength, because for the second leg of a rally to be larger than the first, that requires an exponential inflow of capital and of normally retail investors to do so. We have not seen that. We've seen a large inflow of retail investors and institutional interest in the space, and also just people that are interested in the cryptocurrency markets and in capital. But the vast majority of that inflow took place in January, and it's continued here into February, but it's slowed down slightly. The inflow of people into the space has not gone exponential, although it is still increasing, although that increase, that percentage rate of change over the weeks, is actually slowing down a little bit from what I can tell. The interest in the space is higher now than it was 2 months ago, but the interest is not climbing as fast as it was 1 month ago, if you track with me there verbally. What that means is that you don't have the capital sitting on the sidelines to send us parabolic straight to $28,545 as we were hoping for yesterday. And that seems to be what is taking place right now, is that Bitcoin is having a small correction because it needs to reset those capital costs so that it can actually go through that kind of rally. And I do think that Bitcoin will be able to go through a major rally up to $28,545, but for Bitcoin to be able to get there, it seems like Bitcoin is taking the route that is, frankly, significantly more sustainable, and that is where Bitcoin actually goes through a small correction here, and decides to lock in some gains while also having healthy consolidation. One of the analogies I've used before is a burning forest. One of the things the Forest Service discovered 75, 80 years ago is that if you don't allow fires in a forest, then what ends up happening is you have so much undergrowth grow up in the forest that that it chokes out the really healthy trees. So you have a lot of really healthy pines or a lot of really healthy redwoods, you're out west, whatever it is. And you have all this undergrowth, all this shrubbery grow up on the bottom, and it chokes out the nutrients of the soil. It chokes out the root systems of these larger, healthier trees. And so it's actually a good thing every once in a while to let a fire, maybe every 10 to 20 years, go through a forest to get rid of all of the undergrowth so that the forest can kind of reset and it can be a lot healthier. It's sometimes even healthy if the entire forest burns completely. All of that dead stuff falls to the ground, refertilizes the soil. You've got some extremely fertile soil, and then you have an entirely new forest grow right there on top of that. That's what you might call a bear market. And that's kind of what we're talking about right now. We need a little bit of a controlled burn because we grew a lot, but that growth is not always 100% healthy. Some of that growth needs to be pruned. Some of that growth needs to be brought back under control. And so Bitcoin going through a small correction here is analogous to that. Bitcoin going through a small correction is going to weed out the weakest of hands and allow for the people that are in crypto who are buying this rally expecting for Bitcoin to go to $65,000 to really hold on to it. And this correction is going to punish those who have weak hands, and it's going to reward those who have strong hands. And so that kind of begs the question, what side are you on? Are you going to have strong hands or weak hands? If you are holding for the long term, is a 5% correction going to scare you out of your 5-year investment in crypto? If so, then you're likely one of the people that is helping for this red to cascade right here. However, if you are holding on to Bitcoin right now and moving to the upside with it and planning on it going up for the next several years, and you believe that that's what's going to happen, then you're part of the green. Now, I'm not talking about traders, I'm talking about investors there, because there are plenty of people that know exactly what they're doing, that are shorting this market, and they're making a lot of money. However, if you're an investor and you're getting scared by this, just be careful. Don't let that FUD overtake you. I understand fear. It's a human emotion. It is very common, but don't let it guide your thoughts. Don't be controlled by fear in cryptocurrency or in life in general. You will regret it. All right, so where does Bitcoin go from here? Well, a couple of very important things are happening even as we speak right now. Bitcoin is currently falling below that level of support that we had set back here on the 19th of February 2023, which was sitting at $23,840. Ever since it broke that level, you can see that it's been moving relatively quickly, even just over the last couple of minutes. Why is that? Well, quite simply, the reason that Bitcoin's moving to the downside so quickly right now is because much of the support was sitting at $23,840 or so. And so what you will have seen if you were on exchange about 5 minutes ago, you would have seen a large block of buy orders right there with people ready to buy if we drop below $23,840. That was this. We dropped straight into that order block, then we got bought up. The problem was there was still enough sell pressure to push through the resistance, and now the market just dropped farther. The question we have to find out now is, where do we find equilibrium? Where is the buy pressure so large that the amount of sell pressure that's coming in is not adequate to end up pushing the market lower? You normally, when you're seeing a rally take place, or a correction, as you see here. Now, this is a rally just in the bearish direction. Normally, what you see is that the bearish pressure will start to drop as the bullish pressure starts to increase, and at some point they reach equilibrium, where you see the bearish pressure has come down and the bullish pressure has gone up. Then they hit each other. Then the bullish pressure goes up, the bearish pressure goes down, and the market reverses and turns and goes to the upside. That's what we're waiting to see right now. So that's why we need to analyze what the bullish pressure is, what the bearish pressure is, and be sure to pay close attention to both so that we can get some kind of understanding about where Bitcoin may bottom out. Next, the next level I'll be looking at will be $23,577. That is a level on my chart. And that level comes from our VRVP. If you look at VRVP, you're going to see that that is right around the place. It's even a little bit lower than that, but that's really right around the place where you start to see quite a bit of VRVP support in the last 6 to 8 months. You can see it right here. It's a little bit hard to see because the BTC USD ticker symbol, but right around that level is where you start to see the VRVP support continue to increase, and then it increases to a peak right here at $22,808. So that gives us two major levels to pay attention to. That'd be $22,808 and then $21,500. Bitcoin could also hold right there, just a couple $100 below where it is right now, because you're going to see a sharp uptick in the strength of the bullish pressure. As the bearish pressure, theoretically anyway, would continue to decline, you would find that equilibrium. Maybe that equilibrium would be around 23.5, maybe it'd be around 23.3. But the point is, you would end up finding that equilibrium Bitcoin will reverse and go back to the upside. The question again on the table is, where does that equilibrium be found? I think that you're going to find that somewhere a little bit above 2808. To be honest with you, I'm not too convinced that we're going to end up holding 23,577 because it is a little bit more of an arbitrary level, whereas 2808 is a level that is actually defined by market. The level of 2808 was the exact level that we set here on the 13th of September 2022, which has been a very important level, not just on Bitcoin's chart, but also on the total cryptocurrency market capitalization charts and on the Ethereum chart. So that's where I think you'll end up seeing the next major level of support is at 22,808. Another place you might find it here would be on the 4-hourly chart with the 200 moving average on the 4-hourly chart. You may even find it on the 200 moving average down here on the 6-hour chart. The 6 and 8-hour charts aren't looked at quite as commonly as the 4-hour chart, so I wouldn't bet on that being the level to find. What you're going to look for here is Bitcoin finding support on a multitude of different levels. You could find it at 22,808. You could find it right here at $23,100 on the 200 moving average on the 4-hourly chart. You could also find it, if we look at Lux Algo, because it's going to show up pretty clearly here, you could also find it right here on the bottom of the EQ cloud, which would pretty much line up with that 200 average there on the 4-hourly chart. So the reason that I think you may end up seeing a larger drop here is twofold. Number one, Bitcoin is broken below its recent level of support that it was sitting at $23,840. In doing so, Bitcoin has done multiple things. One, it has broken recent levels of support, which indicates that we could end up seeing another major drop. Now, if we don't see a major drop and we bottom out right here, and then we stay up here, whew, that's some strong support that we just built in this zone right here. So make no mistake, if Bitcoin does manage to hold above, let's say, this level right here at $23,328, then what you're going to end up seeing is a zone of support be built right here. So if Bitcoin does hold somewhere in this zone, great. That's wonderful. That is very much something that would indicate to me that we'd be back testing $25,000, that we'd be back to testing $25,000 within the next week or two. If, however, we don't manage to hold that zone, fall below this level of support at 23.3, which is our local level of support that we set back here on Thursday, February the 16th, from the drop when we first tested $25,300. If we don't hold that, likely the next level of support to find would be the support area right here between the 200 moving average and the bottom of the EQ cloud. I think that you're going to go and test one of these levels, though. The reason is Bitcoin's dropping quite substantially even right now, so there's quite a bit of sell pressure. We've got a pretty much very strongly confirmed downtrend on at least the 1-hour chart. It's not confirmed on the 4-hour chart yet, but it could be at any time. You look at Lux Algo here in the hour chart. I haven't pre-analyzed this, but I can just tell you it's going to be sell. Yep. Sell signal, trend catcher red, boom sauce. We have a red trend catcher. That's where a lot of that sell pressure is coming from as well. But then we're also breaking through the top of the EQ cloud, which means we're probably going to come down to the bottom of the EQ cloud. A lot of times when you break into the EQ cloud, you end up moving all the way through it. So that's something that I don't have a really great example for here on Bitcoin, but I might be able to find you an example on ETH. If I look really quickly, can't find an example off the top of my head. Well, here's one, actually. We broke through the top of the EQ cloud. We fell all the way back down to the bottom of the EQ cloud. That's what we're seeing on the 4-hour chart on Ethereum. Funnily enough, we don't have confirmed sell signal on Ethereum. That's important. But based on the analysis that I've done with Lux Algo over the last couple of years, typically when you break one side of the EQ cloud, then you end up moving to the other side. So I would not be at all surprised to have a price target around $22,800 to $23,000 relatively soon. Now, again, if we do bounce here in the middle, and it is possible to bounce off of almost this invisible middle line of the EQ cloud, which is basically where we are right now, then that's really a very bullish scenario, because if we do that, typically that's going to mean that you're going to rally right back up to $25,000. And typically that means that you're going to end up going through another major breakout to the upside, where Bitcoin could break above 25,236. Because keep in mind, Bitcoin actually broke above 25,236, which is the official level, twice. So it has actually broken it. We just need to see if we can sustain it. Now, the other thing to keep in mind is that if Bitcoin does drop down to these levels, we might actually get low enough to cause trend catcher to turn red. That could end up sending Bitcoin down to our longer-term uptrending level of support, which is visible on the daily chart and is right here. That would be the lowest level that I'm really honestly expecting Bitcoin to go to. I'd be a little bit surprised personally if Bitcoin dropped all the way down to 21.5, because then we'd be falling right back down to this same level, setting the equivalent bottom but higher high. That would be bullish because it's this almost ascending megaphone pattern. But it's not something that I would really expect from the amount of exuberance in the space right now. So 21.5 is in the cards, but that's probably the extent of it. Because the other thing is, if we do drop down to 21.5, we're also touching the one side of the EQ cloud, which should on the one hand give us a lot of support, but two, if we break it, we probably end up falling down to the bottom of the EQ cloud, which would drop us at that time probably down to about $20,000 if we were to hit it right around there. A lot of information being thrown at you. Let me try and make it a little bit more concise. On the hourly chart, there is a sell signal. That sell signal on LuxAlgo has been confirmed as of the last 2 hours. That means that we should be expecting some more bearishness over the next several hours. We may not see just a flash crash down here, but what we may see instead would be Bitcoin kind of coming in and bouncing off of the top of the reversal zone here on LuxAlgo's 1 hour chart. From there, Bitcoin has some choices to make. Either one, it can bounce off of this almost invisible pseudo midline of the EQ cloud, which would be somewhere right around, probably about right around there. Or Bitcoin can come down to 23,340, which would be the level that we set back over here. If we hold above this level, this is pretty critical. If we hold above this level, then we're still in what's known as a bull flag, and then we actually still have the price target in play of driving us all the way up to $28,500. We would just extrapolate it from here, and then boom, that pushes us up to $27,500, and that would actually mean that this is still overall a general bullish trend if we hold above 23.3. If, however, we do not hold above 23.3, then the next level of support that we'd be looking at would be $22,808, and that level is constituted by that local high that we set last September 13th. That is an extremely important level. This one right here is not set by recent trends. This level has actually been in play for 6 months, so this is a very, very important level that we need to pay attention to. We could either fall down to here or to the bottom of the EQ cloud, bouncing somewhere in this shaded area right here, depending on exactly when we bounce. Bouncing somewhere in there or above there, and then we would continue to the upside. So those are really the three scenarios. We can bounce pretty much right where we are right now, which is about the center of the EQ cloud. Or two, we can fall down to 23.3 and hopefully hold above it. Or the third option, we can fall down somewhere into this zone. There is, of course, the fourth option of us falling lower, but we're going to hope and pray that Bitcoin does not fall that low, because we'd like to see Bitcoin hold above 22,808, because then that would also mean that total cryptocurrency market capitalizations and Ethereum would be in better shape, because they would be being led by Bitcoin, doing a much better job at holding itself above its critical levels. So that's kind of what I'm looking at on Bitcoin right now. As far as the why, I know a lot of people are going to be curious, why did Bitcoin drop right now? What I would tell you is, very simply, Bitcoin likely went through a large drop of this caliber. It's not a very large drop, simply because of people being exhausted, simply because of the bulls being exhausted. And so what do you do when you're exhausted? You rest. When you rest, you're not fighting. So then the bears have naturally a little bit of a leg up. The bears having a bit of a leg up is nothing that I am concerned about right now. The bears having a leg up is something that is totally fine with me, because the bulls need to take a breather. The bulls need to rest a little bit. I'm not worried about that. The bulls just went through a 55 to 60% rally in the span of 45 days. Honestly, I have no problem with the bulls chilling out and resting, so long as we're above $21,500 for the next 2 to 3 weeks. I would rather that not happen, but I'm totally fine with us trading sideways and ranging in this area right here, but above the uptrend and at least above 21,005 before we break to the upside and go all the way up to $28,000. In fact, that would probably be the healthiest thing that we could do, because what you want to see are some very well-rested, very well-supplied bulls before they go on a massive run. I've been going to the gym about 5 days a week now, because I actually started going to the gym again, and so it gives me a gym analogy. You don't want to go to the gym if you've just done leg day 4 days in a row and just go and try and do some heavy squats. It's going to hurt. You're going to hurt yourself. You're going to drop the bar. You're going to break your back. I mean, you can do all kinds of things and hurt yourself. That's kind of the situation the bulls are in right now. They've just done 4 days of heavy squats. They've just done 4 days of bench press. And now they're trying to do another one. So maybe back off, take the weekend. I don't know why you do 4 days in a row of the same workout, but beside the point, that's kind of where we are right now. Bitcoin has pushed very hard, and the bulls have pushed very, very hard in one direction. It's not a bad thing for them to take their foot off the gas for a little bit, take a breather, rest, get a protein shake, get ready for Monday, where they go and do it all over again. That's not the end of the world. So that is possible. That's what happens. It is very possible. And in my opinion, I think it's actually the most bullish scenario that we could go through for Bitcoin to simply sit here and, yes, continue to set higher lows, but basically trade sideways. We don't have to set any new higher highs. That's fine. We can stay below 25K for a little while. I'm okay with that. But set higher lows above each other, above 21.5, which is the local high pre-FTX. Have some good news come into play. Have another 25 basis point effective federal funds rate hike. Now, I think we're going to 6% at least, especially with the state of everything in the war in Ukraine. But let some more bullish news come in. Let the market mature a little bit. Let some of this FUD fall back into memory where people are thinking, oh, yeah, FTX collapsed. Oh, yeah, BlockFi collapsed. Oh, yeah, Genesis collapsed. Oh, yeah, because they collapsed, Gemini Earn program went down. Oh, yeah, Binance USD is disappearing into oblivion. It's like withering away, like Thanos snapped it out of existence. We've got the SEC coming after Kraken. You still have the XRP lawsuit. Let some of that stuff, now the XRP lawsuit's just kind of been there for a long time, but the rest of that, let that kind of fall back out of the public's memory. I'm not saying you should forget about those things because they're very important, but people are not going to be trading on as much FUD from those things a month from now as they are right now because they're more recent in memory right now. At the same time, the other thing we have to keep in mind, and this is very important, is that the stock market, the SPY, has been going through a correction. And I've been waiting to share this with you because this is actually what I think is really driving this. Because as I said, we're talking about the Y now. The SPY has been going through a pretty sizable correction over the last couple of days, and you can see that transpiring here basically this whole week. On Friday, we saw a small drop out of this triangle pattern. Then we saw a drop on Tuesday. Now, we were closed for President's Day. Now we're seeing a drop today over on the SPDR, S&P 500 ETF Trust. Say that 5 times fast. That drop is something that is pretty significant for Bitcoin because if you'll remember, Bitcoin is highly correlated to the stock market. The Bitcoin market has rallied despite the stock market not doing a great job recently. Let's turn Lux Algo off just for a second. Bitcoin has rallied dramatically despite the stock market having peaked out at about, 418, I think it was, 417, 418. Bitcoin has done a great job of rallying despite that. During this first rally, Bitcoin had the backing of the SPY. This time, Bitcoin has not had that backing, and it's still managed to rally 20 or so percent. We're also going into a much more difficult rate and liquidity market for credit in the next 5 to 10 years. We'll talk about that a little bit here in a second when we touch on the Fed. But the fact that the S&P 500 has dropped so substantially over just the last couple of days has made it pretty much impossible for Bitcoin to be able to rally up to 25K because Bitcoin really needs a strong stock market to be able to go through a strong rally. We're going to talk about why that is in a little bit when we talk about liquidity and when we talk about the balance sheet, quantitative easing, and credit in our economy. Now, I'm diving into economics here a little bit, but we're going to try and make it simple for you guys so you can understand. But the point is, Bitcoin is normally highly correlated with the stock market. If the stock market's having a hard time, Bitcoin's normally going to have a hard time. So with that in mind, let's take a quick look at the stock market. By the way, we've got almost 700 people watching today. If you will, do me a favor and go ahead and smash that like button. Let me just see how many likes we have on the stream. We've got 45. No, we've got 141 likes. Thank you guys so very much. Please go ahead and smash that like button. And by the way, I have a very special announcement for everybody who is a member of CT2A who's been having trouble getting into it towards the end of the stream. Hint, hint, the link is in the description box down below. Check it. It's /enrolled. It's in the description. If you're trying to get into CT2A, a lot of you guys have had trouble with that. We figured it out. All you need is a certain link. So there you go. It's down below. We'll get into that in a second. But let's go ahead and talk about the SPDR S&P 500 ETF Trust, more commonly known as the SPY, the SPY. The SPY is one of the largest stock indices in the entire global economy, certainly in the United States stock market, the United States being the largest economy in the world, so that makes this a pretty important chart. You may notice some similarities here between this chart and Bitcoin's. On Bitcoin's chart, you have essentially 3 major local tops that are lower than each other, constituting the bear market. Then you have this top right here fighting to get higher than this top right here. That's pretty familiar to anybody who trades the stock market in the SPY. You have one top, a second top, and a third top. And right now, the SPY was attempting anyway to break above that third of the 3 tops. Now, the SPY did not get quite that high. It ended up getting up to 418 and then having a correction. But luckily, that correction is being caught by this uptrend right here. And then there's also this uptrend down here that's been in play for like 2 decades or so. So we can talk about that later. But the point is, the SPY does have some support beneath it right now. It also has this previous downtrending level of resistance that the SPY was under as support too. And on top of that, if you look at our moving averages, you can see it's above both of its moving averages. Okay? That's a pretty bullish thing. And you know how the death cross and the golden cross are pretty important on the daily chart for Bitcoin? They're pretty important on the stock market too. And the SPY just had a golden cross Friday, February the 3rd. about Thursday, February the 2nd, somewhere in there. And the stock market is right above both of those levels, sitting at the 50 daily and the 200 daily. You know what's funny, by the way, is that I actually had not pre-analyzed that. I did not know that the 50 and the 200 were going to be right there, but something just kind of tingled in my head. That was the intuition that you build when you've been in a market for a long time. And I was like, I bet you it's right about above the 50 and the 200. And I clicked on it, and then boom, they're right there. That's the power of education, and that, my friends, is why that you should definitely consider signing up for Club DeFi. You can find the link in the description box down below. Anyway, if the SPY is able to continue through an uptrend, a general uptrend, now it's going through a correction right now, but if the SPY is able to bounce above this downtrend, that uptrend, the two levels of support that are below it, and continue in this upwards trend that has been in ever since October of last year, that's where Bitcoin's really going to get a lot of jet fuel in it. And that's where Bitcoin's really going to be able to go through a big rally, is if the SPY is doing well. So we're going to have to pay close attention to the SPY. The SPY is having correction right now, so Bitcoin likely will also. The question now is, where will the SPY bottom out, and where will Bitcoin bottom out? If the S&P can bottom out at a reasonable level above, let's say, 385, and Bitcoin can hold out above 22,808, then all this is a little bit of a correction. It's a breather. It's a little bit of rest for our bull friends. And then after it is over, we can hopefully and theoretically continue pushing back towards the upside. So why is Bitcoin going through a correction right now? I've shown you the what. There's the why. We've also talked about the how. The why largely is that the SPY is going through a correction, and, because there's another component here, and the Dixie is trying to break resistance. Now, the Dixie trying to break resistance and move to the upside is happening for a few different reasons. We'll talk about those. But the Dixie is the dollar currency index. It's very, very important to the Bitcoin market and the global markets. This is an index that shows you the valuation and price of the US dollar compared to a basket of other major national currencies, such as the yen, such as the euro, the pound sterling, etc., etc., etc. There's a level on this chart. It's at 104. That level for the Dixie is quite important. That level and levels just above it were set as resistance right back here on 11th of September, 1989. Yeah, this is a very old chart. This is a chart that you do literally a decade or more worth of technical analysis on. That level also was set as resistance here in 2017 at about 103. So it was within about a point. We also found quite a bit of support and resistance set on it here in 99 and on into 02. Like I said, we're looking back over 30 or 40 years of data here on the Dixie. Right now, the Dixie is looking to see whether it can break through that resistance level or not. We had a spinning top last week, then we moved to the upside. We're green so far this week. That indicates to me that we probably will see a 104 break. But that's not the only reason. There's a couple of other reasons. Some of the other reasons are that the Fed is tightening its balance sheet, and also the Fed is increasing the Federal Reserve, the effective federal funds rate, the rates. So we've seen us jump to 4.75. I would argue that we're probably going to end up going to 6 for a multitude of different reasons. Some of those geopolitical, many of them macroeconomic and economic. But we're likely going to see the Dixie rally significantly. I could see us going up to 109 or 110. We're at 104 right now. That doesn't sound like a big movement. It's a pretty large movement for the Dixie. That's 6-7%. You normally don't see that kind of movement very quickly on the Dixie unless the Fed is manipulating things, and it has been over the last 10 to 15 years with the QE. So with the Dixie gradually increasing, we're also going to need to see the stock market go through a gradual increase so that Bitcoin can have a rally, because Bitcoin is highly correlated positively to the stock market and negatively correlated to the Dixie. The Dixie going through a big rally is not the best news bears for Bitcoin. It does make things quite a lot harder. Right when Bitcoin started having trouble was right when the Dixie was going through a rally. I will show you right here. Take a look. Bitcoin was doing great while the Dixie was crashing, and then the Dixie started going up, and then the very next day, Bitcoin waddled away right back down to the downside. The very next day after the Dixie started correcting, we dropped 12%. We started to drop 12% in 11 days. That corresponded with one of the largest jumps on the Dixie that we had seen right here between February the 1st and February 14th. Jumping over to the Dixie in between those days, you will notice that the Dixie rallied in grand total 2%. So the Dixie rallying it's not a huge rally, but it did rally, and that was a pretty big rally. That's probably one of the largest rallies the Dixie's seen in a while, and that made things pretty hard for Bitcoin. You can see the correlation show up very clearly right here. It's a highly inverse correlation. And also, the other thing is that the Dixie was rallying very strongly during this last movement to the upside, while the stock market, if you'll remember, was moving to the downside. So Bitcoin was going against both of these trends compared to the way that it would normally move when it went through that big rally over the last week or so, ever since the Valentine's Day CPI data print. So it stands to reason that Bitcoin didn't have as much of a bullish rally as it did back in January. But the thing to keep in mind, the interest is about the same in the cryptocurrency space. The FUD is fading off back into recent memory and into the past. And people are seeing that the dollar is not actually going to drop on CPI as much as they would have thought. A lot of people thought, naively, in my opinion, that the CPI would drop all the way down to 2% like the next year or something. We're in a different world now. That's not going to happen that quickly. Maybe in the next year, but not in the next 3 to 4 months, what a lot of people were hoping for. And that just brings back this confidence that, okay, we need something like Bitcoin to be able to store our wealth in, because the dollar just ain't cutting the mustard, and it's just not good enough for us to hold our value into the long-term distant future. I think the dollar is the strongest currency in the entire world other than Bitcoin when it comes to holding its value, but it's just not good enough to hold your value into the future without having some kind of major crash if you're talking about holding it 5, 10, 15, 20 years, and that is, of course, the value proposition for Bitcoin. So let's talk about the Dixie then. Let's talk about the macroeconomic factors that are going into Bitcoin, because those are equally, if not even more important than what's going on the chart on Bitcoin. Technical analysis is very important, but technical analysis is like standing on the bow of a ship saying, is there an iceberg ahead that we're about to hit so that we can take a little bit of a course correction? Looking at the macroeconomics is like looking at the map saying, we're trying to cross the Atlantic Ocean. We need to go in general that way. That's kind of the difference. Okay, technical analysis is very important so you don't turn into the Titanic. But you need the map to understand where you're going, and you can generally move in that direction. Now, you might be trying to go to England and you land somewhere in France, and then you got to turn and you got to go north a little bit. But in general, you're going to get where you're going. That's what we're talking about with macroeconomic factors, the Federal Reserve, the war in Ukraine, etc. So let's talk about the balance sheet. The main thing that everybody talks about on the Fed side of things is the effective federal funds rate, and that is very important. That is the Fed's favorite tool for manipulating markets. Manipulation sounds like a bad thing. The Fed moving the rates around in general and in theory and by mandate, they are trying to stabilize the United States economy so that it doesn't go into a giant freaking depression and it's able to continue growing in a strong way so the United States, its citizenry is able to maintain a high standard of living, that we're able to grow, that we're able to invest in new technology, that we're able to maintain a large standing military to police the entire freaking world, which we're getting away from that, but still, we have a lot of that going on. The Fed, in theory, is supposed to manipulate the United States dollar in a way that helps to stabilize the United States economy for stable growth around 2 to 3% every single year. Whether or not they do a good job of that is one of the most hotly debated topics in all of modern politics. But one of the ways that they do that also is called quantitative easing. It's a lot more complicated, but it's arguably even more important than the Fed's rate on the short term. The effective federal funds rate can be moved very quickly, and essentially the Fed rate impacts the way that different banks can borrow and lend from each other in overnight lending. So it's a very important metric, and it is their most potent short-term method of manipulating rates. But it's manipulating credit. It's manipulating the ability for people to transact and take out loans, in short. If nobody's trying to take out a loan, then the Fed rate doesn't mean a whole lot, because you're manipulating something that doesn't have a lot of traffic. It's like having a giant dam and there's like a stream running through it. Like, yeah, you have a lot of power to manipulate a gallon a minute worth of water, but you don't have the Colorado River, or what used to be the Colorado River, flowing through there that you can manipulate. So you have a really powerful tool for not a whole lot of flow. And that's what they kind of ran into during that's what the Feds run into before. And so that's where, if you don't have either one, you don't have a lot of capital moving through that system, they're not able to manipulate the economy very much. Or if they've already dropped the Federal Reserve rate down to zero, then they've kind of lost their power. Using the dam analogy, if you open up every single spillway, then you've already done everything you can. There's too much water in the reservoir, it's going to top the dam. You can't do anything about it. You've opened up every single spillway you have. You've got to go and use the overflow spillway, which is something that actually happened in California a few years ago. That's where the Fed was during the pandemic. And so what they did is they entered something called quantitative easing. This is a chart of the Federal Reserve's balance sheet. This is an extremely important chart because this shows how much money the Fed more or less has in treasuries and in mortgage-backed securities. Those are the two ways that they manipulate the market through quantitative easing. Essentially what they do is they go on the market and they buy treasuries, they buy mortgage-backed securities, with money that they created out of more or less thin air, and then through that, they're injecting money straight into the economy. Now, what they're doing, by doing that, they raised the balance sheet up to about $9 trillion. That's not $9 billion, that's $9 trillion. They're holding about $9 trillion worth of funds, mortgage-backed securities, etc. What the Fed is trying to do now is they're trying to lower that balance sheet to help get inflation under control. That's going to have a couple of very important impacts on the economy. Number one, that is going to lead to a huge shrinking in the amount of liquidity and capital in the market, which is going to make it far more difficult for investors to be able to invest in more risky environments such as the Bitcoin and the cryptocurrency markets. However, it is likely going to lead to lower inflation. It's likely going to lead to a more stable economy over time. And of course, it will have an impact on things like the national debt. It will have an impact on things like the inflation of the dollar. It is generally a good thing that the Fed is attempting to lower the balance sheet. And in fact, they're lowering the balance sheet right now, if I remember correctly, by about $95 billion a month, up from previously around the second half of last year when they started lowering it by $47.5 billion a month. So they're rolling off about a third of that is in mortgage-backed securities. The other 2/3 of that is in treasuries. So they're rolling off about $60 billion worth of treasuries right now and about $35 billion worth of mortgage-backed securities every single month. Now, a lot of you guys don't know what I mean by roll off. Essentially, when you have a mortgage-backed security or a treasury, a lot of times they will go through something called maturation. What the Fed does is they essentially take the maturity and they reinvest it straight back into whatever they were just buying. So they keep that same balance. They can lower the balance sheet by just not reinvesting that money and then letting that money poof out of existence because they created it in the first place, so they can do that. By doing so, then they lower the amount of liquidity in the space, and that causes a huge crunch on treasuries, but also, more importantly for the economy, that causes a huge crunch on mortgage-backed securities because there's not as much money in that market, which means that the interest rate has to be higher, which impacts people that own homes or trying to buy homes, because then you have to make up the capital difference. From who? From the people paying for the mortgages. If that doesn't make any sense, that's okay. Let me just explain very briefly what that means. Essentially, they put a lot of money that they created out of thin air straight into the economy, and now instead of reinvesting that money with the made-up money, they're taking the made-up money and they're destroying it. By doing so, they're letting the market take back over control of the mortgage-backed securities and the treasuries, which is a good thing, but it does mean that you're going to have a lot of liquidity tightening over the next 3 years. They're trying to roll off pretty much half of the amount of money here. That's pretty much all of the money that was printed. This is what people mean by money printed through quantitative easing during the pandemic. That's about $5 trillion they're trying to roll off in the next 3 years. They want to roll that off by 2026. If they do that, that's going to take about $5 trillion straight out of the mortgage-backed securities market, making the housing market more expensive to not the housing price is more expensive, but the cost of having a mortgage more expensive because the interest rates are going to go up. That's going to squeeze the housing market, and that's going to change the economy in a lot of ways. One of the ways that's going to change the economy is it's going to mean that there's just simply less capital floating around. There's just less money to go around. So people have to be more wise with their money. They're going to put into the less risky assets. So in the long term, this could actually be a bearish phenomena for Bitcoin, but a bullish phenomena for the dollar. And this is one of the big things that's actually going to lead to the Dixie going up. If you look here, this chart, the total assets that the balance sheet was holding was sitting around $9 trillion in May of 2022. If you look back over to the Dixie chart, we can see how that impacted the Dixie. That's the dollar currency index. Right around May of last year, we saw that the Dixie started going through a pretty large rally. It was already going through somewhat of a rally, but after they started rolling off that balance sheet, it really got kicked into overdrive, and we saw a 12% increase in just 4 months on the Dixie. So that's actually very important, because what that means is that is changing the credit and the liquidity landscape in the entire United States and global economy, which is going to make things for the stock market more difficult, things for the housing market more difficult, but likely bring inflation under control. None of those things are actually bullish on the long term for Bitcoin. All of those things are headwinds for Bitcoin, because if the stock market is doing well, normally Bitcoin's doing well. If there's a lot of liquidity in the market, then that means people are more likely to invest in risk-on assets that they consider Bitcoin to be one of. If the housing market's having a hard time, well, then people are not going to put as much money into Bitcoin because they're having to put more money into the interest rate for their house. So that's not actually a very good thing, bullish thing for Bitcoin in the long run. But if you're an American that uses the US dollar, that's going to be a painful thing, because it will make the economy a little bit less strong in the short term, but it will hopefully get the dollar's inflation under control. That's really kind of not the jab, but that's really just kind of, giving a big old punch to the inflation. That's what the Fed's trying to do. So again, The reason I bring that up is for the impact on the long term for Bitcoin. That is going to likely be a headwind for Bitcoin over the next 3 years. I would predict at this point that this coming bull market is going to be large. I do think that there's a large likelihood that we'll hit $100,000, but I don't think you're going to see Bitcoin doubling or tripling its previous all-time high, or like quadrupling or quintupling it. You'll probably go to between $100,000 and $200,000 based on that data. Now, also on market cycle data, I could see Bitcoin going to 200. So between maybe $90,000 to $180,000 is where I'm predicting the bull market will rally from this point, so long as Bitcoin's able to break through some of these shorter-term headwinds like the collapse of multiple cryptocurrency exchanges, shorter-term regulation, and the war in Ukraine, which has not decisively moved in one direction or another. Now, one final thing I want to talk about before we jump into chat is that this is kind of just, you're a citizen of planet Earth, so you want to know this. This is a really important thing. Russia just officially withdrew from something called the START Treaty. You might not, it's just called START, actually, because the last T stands for treaty. Why is this important? Before you click off this video, you want to hear this. This is only going to take a couple of minutes. START was the Strategic Arms Reduction Treaty, and this is the treaty that was put into place in START 1, I believe in like 1989, 1990. This is right towards the collapse of the Soviet Union, beginning of the post-Cold War era. And this was Russia and the United States saying, okay, we're going to start reducing the number of warheads that we have on ICBMs and other nuclear-capable launch facilities, such as B-52 Stratofortress bombers or Los Angeles-class submarines or Trident II intercontinental ballistic missiles. They're going to stop and the equivalent for the Soviets and now the Russians. They're going to stop putting so many nuclear warheads and pointing them at each other, and they're going to reduce their nuclear stockpiles and the number of nuclear capable delivery platforms that they have. That treaty has been renewed pretty much every 5 years since the fall of the Soviet Union. Putin just pulled us out of all of the START treaty, pulled Russia, not us, I'm from America, I'm an American, firmly on that side. Putin pulled Russia out of the foundational START treaty upon which like all of the other nuclear non-proliferation treaties are built on. So like all of nuclear non-proliferation just disintegrated like 2 days ago. So that's kind of why I just bring that up, just so that you know, because that's going to have an impact on crypto in some way, because that's going to completely change the dynamics geopolitically. I can't tell you exactly how that's going to impact Bitcoin. What I can tell you is that that is the biggest step in the wrong direction for nuclear proliferation since the creation of the atom bomb. And so I just thought you should know that. Putin withdrawing Russia from START undermines all of those other treaties, all of the treaties that limit the amount of tanks that Russia and the Europeans can have, all the treaties that limit the amount of nukes that Russia and NATO can point at each other, all the treaties that limit the amount of different missiles and what am I trying to say? Ballistic missile launchers that both sides can have. All of those treaties just poofed out of existence about 3 days ago. When Putin removed Russia from the START treaty. So again, not exactly sure how that's going to have an impact on Bitcoin. In the short term, it probably won't. But geopolitically and as a citizen of, I don't know where you live, but I know you live on Earth. It's a pretty important development. All right, I'll give you some more updates on the Russian-Ukrainian war another day, but right now, that's the main thing that I wanted to bring to your attention, is that geopolitically, we basically may have just taken one more step towards an arms race if Russia has the money to even do that. Now, they probably don't. They probably don't have the men and the industrial complex to start ramping up nuclear production the same way Stalin did in the 50s, trying to achieve parity with the United States. But the fact that Russia did just withdraw from START means that is now a possibility for Russia to start ramping up nuclear capabilities and for the United States to do the same in the next 5 to 10 years. Russia doesn't have a lot of military power, obviously, because they're failing pretty badly in Ukraine. That's probably not going to be the case in 3 months when they deploy another 500,000 men. But if Russia did go down and did collapse, they've got a lot of nukes they could launch. So they're one you got to watch out for. All right, let's go ahead and read chat. Really appreciate all of you guys in chat that have tuned in today. We've got Silent in chat. We've got Corey in chat, the philosopher in chat. I underestimate Russia massively. No, what I underestimate is Russia's ability to arm all those people that it mobilized, because there's probably about 700,000 men in Ukraine right now on Russia's side. They have a huge amount of dudes, and some of them are running at the Ukrainians with rifles that are twice as old as them. It's a meat grinder over there right now, and that's a very sad thing, because every single one of those lives lost on either side is a soul that we care about and we'd pray for, even if they're not acting correctly. Sean Frost in chat. Fuel the jet, there you go. Long-term hold for me, said Silent. Absolutely. I do own Gala, one of my top gaming metaverse picks. I think Gala's going to do pretty well in the next bull market. Let's see. By the way, let's see. Fed is more aggressive on rate hikes. We're still going to see another 15 to 20% drop in traditional market. Dixie on its way up. Nothing pointing bullish for crypto for at least another 4 to 6 months. That is possible. That would be the worst case scenario in my opinion for Bitcoin, but that is definitely a possibility. All right, let's see here. Let's read some chat. Okay, while I'm reading chat, let's see. While I'm reading chat, I do just want to let you guys know, what is a good investment for World War III? Lockheed Martin and bottle caps, my friend. Lockheed Martin and bottle caps. Everybody who is a member of CT2A, and please share this with anybody who you find having trouble with CT2A. I'd be more than happy to show it to them. I want you to do me a favor. Go into the live stream description. I'm going to bring it up here on stream, actually. Because for everybody who is having trouble with CT2A, I believe I found your fix. This helped a couple of people yesterday in our support line, which I have an update on that here in a second. But for any of you who are watching the stream, come here to the stream, scroll down, hit show more, sign up for Club Defi, by the way, by going to cryptojebb.com. But you can also scroll down, use this link to access CT2A. You click this. This will bring you to the bitcoinacademy.com. bitcoinacademy.teachable.com/courses/enrolled. If you are a member of CT2A, you will see it populate right here. You can click on it, and you can scroll through all of your videos. CT2A is a product that is not for sale anymore. It has been antiquated. Of course, Club DeFi, Principles of Technical Analysis, is the current course that is on offer with a lot of updates, and it's a lot newer than CT2A, and it's actually receiving updates right now. But for any of you guys that are in CT2A, if you go to that link, again, just go down to the stream, hit this button right there, use this link to access CT2A. This should take you to this URL, bitcoinacademy.teachable.com/courses/enrolled. And if you're in CT2A and you're logged in, you should see it right here. Now, if you're not logged in, all you got to do is come up here to this button up here, hit the login button and everything. And if that doesn't work to log in, then you can go to one of these links up here and log in with one of these links. Don't buy the product, just log in. In fact, it'll show you a different course if you are not in. But go to that and it'll bring you right here. That should help. Tell me if that helps. I do believe that it will. Because there's a bunch of people that are having trouble with it. The problem is that since, and this is on us, but since Club DeFi was rebuilt, it meant that there wasn't an actual, you couldn't actually site navigate to CT2A. You had to have a direct link to it. So that's something on our side that we weren't exactly sure what was going on. I believe I just found the solution with just by giving you that link. We're going to find a more permanent solution, but for any of you guys that are trying to get into CT2A, that is a link that you can use to get into it. Let me know if that works. By the way, another thing on customer service, we had a problem with our vendor that was handling our customer service tickets. And so if any of you guys have been sending us emails to support@cryptojebb.com, we haven't been able to see them. And it's actually not that we haven't been trying to see them. We have been trying pretty much every single day to get into our support line. The vendor that we were using locked us out of our support system. We can't get logged into it. And funnily enough, that vendor's customer support kind of sucks, so we can't get access to it. I'm not going to say the name. I don't want to bash the vendor. I'm hoping that they'll do a better job, but we're not going to be working with them anymore. We're going to be seeking a full refund for any funds that we've given them over the last 3 to 4 months during this time, because many of you guys have been trying to reach out to us. And so here's the problem. You're reaching out to support@cryptojebb.com. Support@cryptojebb.com is forwarded into this vendor, and we're literally not able to get into that vendor because we've had our access not revoked, but we just can't get into it. No matter what we do, getting on the phone with them or anything. So I'm going to have to call them and cancel it and then factory reset a lot of it. So we found a solution right now so that we can at least respond to your support emails. So we responded to a bunch of them yesterday. A bunch of you guys that were trying to get into CT2A for a couple of months. I am so sorry. It was something that we've been trying to fix. We finally found a workaround so that we can get back access to our own support line. So we're getting caught up on emails. We got caught up on a lot of them yesterday, but if you've been sending us emails and we haven't seen it, we do apologize. We have not been ignoring you. We've been trying very hard to get back into it, but we should be able to take care of that customer support now, and I've actually been able to help several of you guys get back into CT2A, and I think what I just showed you from our discovery yesterday will help all of you that were in CT2A get back into CT2A. And remember, if any of you guys are in CT2A, you are also eligible for a 25% off coupon code for Club DeFi, Principles of Technical Analysis. Again, I do apologize. We're going to be making sure that everything's wrapped out. We're not using that vendor anymore for customer service, because you would think that somebody who does customer service for a living, as far as their business, not somebody, it's a company, would have good customer service of their own, but it's definitely not the best. We can't get through to them. So we're just cutting them out entirely, and we are able to see your emails now, but we can't see the emails that you sent more than about 4 days ago. If you sent an email more than before like last Thursday, you're going to need to go and resend it again. I do apologize. I know that's an inconvenience. I don't want it to be that way, but we should have it fixed now for permanent, and I am pretty excited about that. All right, and the last thing, of course, is that if you guys have not already, I would highly, highly, highly recommend that you go to our new website, cryptojebb.com, and check it out, because on this website, you're going to find all kinds of information about me, about the channel, and also about Club DeFi. You can see our mission right here. We want to help people achieve financial sovereignty and help them to navigate those markets. You can see our courses right here. Club DeFi Principles of Technical Analysis is active right now. Principles of Trading and Principles of On-Chain Analysis are coming soon, so look forward to those. Club DeFi's Principles of Technical Analysis is active, though. If you click this button, it will take you right on over to Club DeFi, and you can see the courses right here. There's over 40 videos, and you can hit enroll now to go ahead and jump in. If you are a member of CT2A, you will get 25% off this course, and you can also see 4 preview videos right here so that you can get a feel of what Club DeFi is all about. This is Principles of Trading. It has 62 videos covering a ton of different information about trading and technical analysis, which is what I just showed you a lot of here on the live stream. Moving on through the rest of the website here, you can also see some things on the About Us page. I'm not going to read you all of it because I want you to go and look at it yourself, and then if you hit right here, it'll take you right back to the YouTube channel. And through Contact Us over here, this will bring you to the support@cryptojebb.com email, and you can email us there. Again, as of last Friday, this is fixed. You can actually reach out to us, and we will get back to you as quickly as we possibly can through that. We do very much apologize for the delay in that. Again, it's on this. Something crazy happened with a vendor. They wouldn't let us in. We've got it fixed now. We're not going to be doing business with them anymore, and we should be able to get back to all of your emails at this point in time. It's really crazy because we could log into support@cryptojebb.com, and we couldn't see any emails, and we couldn't unforward the emails. If you send an email to support@cryptojebb.com, and it's still a little glitchy, you're going to get a response that shouldn't be there. That's the vendor that we got to get rid of. We couldn't see the emails because the vendor was pulling the emails from the email service, and we literally couldn't do anything about it because to unlink support@cryptojebb.com from this vendor, you had to get into the vendor, but we couldn't get into the vendor. It's a whole mess, and I do apologize. It's something that we had set up for about a year, but it just never really worked well. I don't know why the team was using it, but anyway, we've got it done with now, and we're going to get it fixed. I'm actually probably going to get on the phone with them today or tomorrow and get it completely closed out, but we should be able to get back to all of your emails now. I am a little over time here. I'm going to read chat for just a couple of minutes, but let's go ahead and get ready to wrap it out. Thank you guys so much for all of your support and everything. Thank you so very much for your support. I conducted ops with Russia, sorta, in 1998. Their military is a joke. It blew their mind that every one of our guys understood how to use a map and compass. Only their officers are trained to do that. Oops. I've worked in Russia, and there is an overwhelming tough guy ego, even in the females. It's like a comedy show. It comes across as a general, very low IQ and hysteria, even to the extent it hurts themselves. Ugh. Yeah, there's definitely a little bit of a conversation going on in chat about Russia. Let's see. All right, guys. Well, we're probably going to go ahead and wrap it out here. Really appreciate all of you guys and everything that you have done for me and done for each other. Continue to work together and consider joining Club DeFi. If you have any questions about it, feel free to email support@cryptojebb.com. We'll try and get back to you as quickly as we can. But thank you guys so much for all of your continued support. That's going to be it for today. Before I go, though, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good